part 2 in our Master Budget and Responsibility Accounting series. And here we're going to be looking at a purchases budgeting example. The Routh Company produces wine. The company expects to produce 2.5 million 2-liter bottles of Chablis in 2010. Routh purchases empty glass bottles from an outside vendor. Its target ending inventory of such bottles is 80,000. Its beginning inventory is 50,000. For simplicity, ignore breakage. Compute the number of bottles to be purchased in 2010. So just as with our prior example in part 1 of this series, we're not looking at a T account with dollars. So again, I'm using the tool, the T account tool, and we're using units, or in this case, bottles. So we're going to fill in the information of our T account here that we're given. We're given beginning inventory of 50,000 bottles. They tell us that we want to end up with 80,000 bottles, and that we expect to produce or use in production 2.5 million bottles. So just as before, my inventory requirements is my production, what I'm going to use in my production, plus my ending inventory. And that gives me 2,580,000 bottles that are needed. Well, I already have 50,000 in beginning. So if you subtract the 50,000 in beginning from the total inventory requirements of 2,580,000, you're left with 2,530,000 bottles that need to be purchased to meet all these requirements.